The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the May 28th. Hour 2 edition of the Trader's Edge. I'm your host, Steve Rhodes, and as always, it's great to be with you. Hope you're off to a great start of your day. If you're not, let's make sure that we do everything we can to have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right, folks. When you and I, we make that one little 2x4 shift out there, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstance in the markets. We'll go see what the bulls and what the bears have in store for each of us. And as always, would love to hear from you. Of course, the easiest way to do that is to dial on in at 877-927-6648. Of course, internationally, you can reach out to us at, 727-445-1044. This is what? Terrific Thursday. Of course, it's May 28th. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off about 60 points, trading out at 18,103. S&P down about 7 at 2116. Composite off about 20 points. She's trading at 5,086. Russell 2000 off about 8 points, trading at 1246. The DAX is up 82 points this morning. The FTSE's down 10. Gold is flat. Silver is flat out there. I lead the charge the upside. It's Chipotle Mexican Grill up 16%, up 2.5%. Palo Alto Networks is up $7. That's 4%. Rally Software, that's rallying. Maybe a buyout there. It's up 43% this morning. Western Digital up about $5, 5% there. Tech Data Corp up about 7% out here to the downside. URI, United Rentals, off $7.5. That's nearly 7.5%. Canadian Pacific Realty down 4%. You've got Regeneron Pharmaceuticals off about $5. Let's go ahead and get into it. Let's take a look at the charts that are going to be the most important for each of us to be looking at the day's end. But let's go take a look at them. We'll first start off with the VIX index. What do we have out here? Right now, the VIX index trading at 1375. The actual 50-day exponential moving average, as you and I speak right now, is 1376. So we'll call it 1376. I'm not talking about closing at 1377 or 1375 as giving us any kind of real key information out here. But any close above that line, that's when, again, the real carnage in a market can begin. We saw prices close slightly above that after about that, 15% day to the upside 2 days ago, May 26. Yesterday, we saw a pullback. We saw price get below and close below that 50-day exponential moving average. Right now, that's being tested. Is this going to be a test and a reject? If it's a test and a reject, that's an indication to you and I that the market will move sideways to higher out there. If price gets above that 1370, what do we call it, 1377-ish, 76 area out here, and preferably you'd like to actually see it close. Well, if you're short, you want to see it close above the high from May 26. And that high was 1463. If you are not short and you're long, then what you really want to do is you would just simply want to see it close below that 50-day moving average or where it's traveling at right now. So that's the first thing to be able to take a look at. The second thing that we want to be able to take a look at out here, sorry about that, folks. Give me a moment here while I do a couple things, a little housekeeping. The second thing we want to take a look at are the summation and indices. Now, I'm going to focus in on the NASDAQ out here. The reason is because the NASDAQ was the index that motored, really had the Motor City going yesterday. I mean, that motored higher, right? We had an all-time new closing high. Now, you and I, we don't necessarily care whether it's a closing high or not. We're actually looking for whether it's a tick higher, is it a close above, a swing point, things of that sort. But we did have a move higher, and that move higher actually took the price oscillator really up to the zero line, just slightly above it, 0.80. What we can see here this morning is we're seeing a deflection to the downside. Any close today below the zero line out here, and that really says that, hey, it was always the sellers that had control of this market, even yesterday with that move higher inside of the market. And what I mean by that is, if we take a look at the broader sector, right, you've got 2,400, 2,800, I think it might be about 2,800 issues inside the NASDAQ composite, something like that. New York Stock Exchange has got like 3,300 issues that trade. If we take a look at it, you can see that it's price oscillating. And what we're doing, folks, is we're focused on the bottom portion of my screen out here. What we can see here is that it never made it up to the zero line yesterday. And it can today. It's pretty easy. I don't remember the number of issues. It's included each day in my newsletter service so that people know exactly who's in controls, buyers or sellers inside of the market. So inside the NYSE, the broader spectrum of the market, it's the sellers that are in control. Same thing inside the Dow. Dow had a nice, impressive dollar move yesterday. Inside day is all that it did from a candlestick standpoint. If we blow this up on our screen out here, you can see it's still below zero. Now, look, as I mentioned, there's really two charts to really focus on when it comes to the day's end, when it comes to 4 o'clock, and that being that VIX index. So we already know what that number is, and you already know what to look at. And the other is going to be the price oscillators inside the Dow and inside the New York Stock Exchange. Well, now I guess the composite as well. If all three of those close above zero, look, it says that we ought to at least move higher into the middle of next week, I would guess. And if it doesn't, it just tells us that that cycle where we see the beginning of a sell in May, it's really, let's not get caught up into that nice rhyme. It's during the unfavorable seasonal cycle, and the highs usually don't come in May. It just means that initial wave of selling is underway. And we should see that, I don't remember the exact date off the top of my head, we should see the market move lower for a bit of time out here, maybe about another week or something like that. And then we should see, don't be surprised, okay, to see the market actually move higher into mid-June. Before then, you start to get that real stroke to the downside inside of the market. Now, what are we going to be watching inside, if in fact that plays out, okay? And, you know, this is all really about planning what the market should do, waiting for it to do that if it does, and then, in fact, going ahead and taking action. Of course, taking action if the market is doing something else. Right now, that's really what it's doing. One of the things you and I will be looking for is we'll be looking for the New York Stock Exchange. We'll be looking for this price oscillator to get nice and deep, somewhere below the minus 200 level, or right in that area. When it starts getting down there, we've got to take a look at other patterns in the market and see whether it's intraday patterns, whether it's daily patterns. We've got to see what's really going on, because we should expect at least a move off of a that's really referred to as really an oversold bottom inside of the New York Stock Exchange. So those are going to be really the two areas that we need to pay attention to. If there was a third area that Stevie would be focused on, that third area would be the daily chart for the Euro-Japanese yen, just to see what's going on there. So let's go take a look at it. You've got the VIX index, which is a signal of liquidity inside the marketplace. That's why you and I pay attention to that 50-day. And then you've got the Euro-Japanese yen. You've got the carry trade currency pair inside the market. What we can see here yesterday, take a look at it. Fairly nice candle out there. Not the widest of ranging bars, but not the smallest either. And so a pretty fair sized candle. You can see that was moving up. Therefore, and it never gave it up. Therefore, no reason for the market to have pulled back either. We have seen, remember this chart here has got a 15-minute delay, so not that big of a deal. We have seen this morning some additional follow through. What this actually says, let's not be surprised if we see the market, we see the buyers come in, we see those price oscillators get back above the zero line, then the expectation is, well, then really we should be, you know, you've got the Euro-Japanese yen moving higher, so, and you get the VIX just slightly below the zero line. There's absolutely no reason right now that the market should not be able to do that. And then the currency pair here, Euro-Japanese yen, should go and test its highs, 136.96 to 136.62, somewhere in that range. Look, if it takes out that level of 136.96 inside the Euro-Japanese yen, then I can most assuredly suggest to you that this market will motor on higher. Then maybe what we've got to do is come take a look at the third-year term presidential candidate cycle that's in play out, still in play out there. But the market since January has really followed no analog pattern historically that I have been easily able to see. I've looked at a number of them. Trust me, just looking for clues. You know, you and I were always looking for clues in the marketplace. I just haven't found it. If you found one, you know, send me an email or give me a call so we can take a look at it online. Now, as long as we're inside the currency area, let's go take a look at what's going on inside of the euro. We're going to try to take a look at what's going on inside the euro versus the U.S. dollar right now, and it's basically slightly flat out here. But we want to, as soon as the data pops up on my screen, it'll be easier for us to take a look at it, because you and I looking at this blank screen, that makes it really difficult. Okay, here we go. Just a little hocus pocus dominocus out there. Here's what we know about the euro versus the U.S. dollar. We know that coming off of the low from April 13th to the high that was out here on May 15th, we've seen a 0.618 retracement. I mean, we're really sitting right on that number right now. However, that alone does not mean that that is now the C point of an A to B equals CD to the upside, that retracement. What we do know is that it stopped to take a rest at that floor of the elevators going to the downside out here. There is no bullish reversal signal yet inside of a daily time frame out here. So just because you hit the 0.618 area does not mean that that's where the market goes ahead and turns around. It's an area where you want to be paying attention, where you want to focus. You want to shift down into some shorter term time frame charts, see if there's some patterns out there. Maybe your first A to B equals CD up pattern inside a 10-minute or 20-minute chart, 15-minute, 30-minute, something along those lines, to confirm that the 0.618 may in fact be on solid footing out there. If this area fails, which right now the indications are that it has, right? It's not failed, but it has not given us a reversal signal. So markets will continue to go lower until you see a bullish reversal sign. Markets will continue to go higher until you see a bearish reversal sign. It really is that simple out here. That says that the $7 area is in play when we take a look at the euro. If in fact the euro continues to pull back, it's going to go ahead and get stronger, and therefore the U.S. dollar, it's going to get weaker, and therefore the U.S. dollar index is going to get stronger. So we get back from this first breakout here. Speaking of those things, let's go take a look at Goldilocks and silver. Dow's off 52, S&P's down about 6 points. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 65. S&P is off 7 points. As I mentioned before we went to break, let's go take a look at gold and silver. Of course, not much to really report here. We know that gold is just simply traveling inside of a little sideways range out here. It's been doing it for a couple of months or so. It's about a 75-point area. However, it is down. Well, what is the bottom? I don't know. I'm doing this off my laptop this morning, so there's a couple of lines in here that aren't exactly the lines that I wanted. But here we go. Let's put that in as we speak right now. So you've really got a price move between 1168.70, 1224. Now, as we take a look at gold, there's a couple of things. Well, you know, there are a couple of things we can report on for you. So we've got gold moving lower. Little doji style candle as we speak right now today doesn't really have any meaning for you and I. We know that gold is also below its TAS daily market profile out here. That was at 1205. That's acted as resistance. So this would suggest to me that we're going to see gold is coming down right now, and it's testing the swing point from May 1st out there, which looks like 212,000 contracts on that day. So far today, they're about 200,000. So it looks to me like gold will get back and should test the bottom of that candle out there. So if it closes, look, it's got to close inside 1184.40. If it does that today, expect a test of 1168.40, and just expect gold to trade inside that narrow range out there. The case of silver out here, silver's up 2 pennies right now. It's trading at 1668. Silver here has also been doing a retracement. No bullish reversal signal or anything like that at this stage. Really same type of thing with regard to the mere fact that it's trading below its TAS market profile low. So no real message here to be long. And the 0.618 retracement levels down around the 1640 area. No bullish reversal signal there. So there's no message at all to go long silver. Let's go take a look at natural gas out here. Natural gas is pulled back into that area that we were taking a look at. We were looking at this with Rich in Orlando a couple of days ago. I don't know if he's still in the trade. The DGAZ, I believe, was the 300% short of natural gas. And now he's at a point where he does have to make a decision. Because he doesn't have to do anything, quite frankly, but I'm sure he's at a point where he's now really making the decision because natural gas has hit that objective, which was $2.77. The actual low so far, $2.77. So it did hit that 0.618 retracement. Johnny on the spot, as well as doing that, it also got down. It's trading really right now at its market profile low, the bottom of that box, which is $2.79. You're just slightly below it. Now, is there a message here to actually reverse and go long and take off the short position? I don't know. We'd have to go down into intraday chart. Let's just see what the 30-minute chart information has to report to us. So on the 30-minute chart, what we can see is getting down into that 277 level here this morning. It was done, this is on a 30-minute basis. This was done between the 9 a.m. and 9:30 time frame out here. And during that time period, we saw, a pretty good volume to the downside. What you'd like to see is that low get tested and then rejected. That's 2.776 out there. There is no signal here, as I see it. There's certainly no bullish reversal signal here that would say on a 30-minute chart that there's time to go ahead and close out the short and even go long. Let's put it on a 10-minute basis here real quickly. On a 10-minute basis, really the same kind of thing, the same kind of setup. In fact, on the 10-minute basis, what we can see is you had a nice new box that formed this morning at around 9:30. Price has run into resistance at 279. But what you'll notice on this 10-minute chart, there's no light blue line out here. And that no light blue line, that point of control says it's right there at the same as the bottom of the box out there. That says that 278 ought to be really strong level of support. So it says you should continue watching natural gas. That's taking a look at it on 3 different time frames. 10-minute chart, truly ultra short time frame, as well as the daily and a 30-minute chart out there. Now, speaking of shorter term time frames, let's go take a look at the trading range for the day. Let's go take a look at it. And the trading range, the opening range, that's going to be between the time period, the high and low. We're taking a look at just the ES Mini, but you can do this with whatever instruments it is that you trade. Inside the ES Mini, the S&P futures contract, that opening range is from 21.12 and a quarter to 21.20 and a quarter. So we've got an 8-point range today. Now, price may just travel with inside this area. Yesterday I mentioned we went ahead and we took a look at the opening range. It was a little bit wider than this box out here, and I suggested to you that if price went above or below, you could get 3 points out of the ES Mini. On average, you can get 3 points. Well, the reality is the high was taken out eventually yesterday, and it was worth about 8 to 9 points out there. Now, with regard to 3 points, we're seeing right now price is trading down towards the lows. We're trading at 21.14. It's down towards the bottom of that opening range, which is the 21.12 area. Now, what we can see, though, now there are times where you're not going to get that 3-point move on any kind of breakout. You want to go find areas of natural support and or resistance. When we get back from this break, we'll take another look at this because 21.1075 is your 0.618 retracement of yesterday's move. That may in fact be support. This is Steve with TFNN. I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 77, S&P is down 8. Now, there were some natural gas numbers that were released at 10:30, and and it's the whole reason why we take a look at these. We take a look at these levels of support, and we look for a bullish reverse. When something's pulling back, we look for a bullish reversal signal. You see, the cool thing is that the buyers and sellers inside the market. It took me a long time to learn this, and I'm sharing this with you. And if I were going to impart upon you any great lessons out there, any great tool, it is that the market, the buyers and sellers really have one role. And that role for you and I is really to be able to paint signs. That's their entire job each day. They go out there, they do buying and selling. And thank goodness for Japanese candlestick charting. Thank goodness for Steve Nissen for going over to Japan, doing all the research that he did, and really helping to popularize that here in the U.S. When I began my journey in technical trading, look, the reality is I'm no different than any of you out here. My journey in technical trading began probably in about 2006. Many of you have heard that story. It took me, I knew I was searching, just like maybe you are as well. I knew I was searching for something because fundamentally, I was invested in stocks that were doing great, and you'd wake up the next morning and they'd take a 30, 40, 50% haircut out there. There were companies like, at that stage, they were Monster Beverage, Red Hat, a number of stocks like that. And I was like, it was clear I was missing something. And that's really what led me to going ahead and immediately jumping in within hearing the commercial actually, it was the first time I heard Tom on the radio. I went ahead and heard the commercial, or I went on the website maybe and looked and saw they had a master trader course. That was on a Friday afternoon that I heard them, and Monday was calling the office to find out that there was a master trader course that was beginning that week on Thursday. And, went right to it. Because I know that the only way that you and I really learn anything is we have to decide to immerse ourselves in it. And that was the best way for me to be able to do that. And in essence, that's what I've done. And then in learning each of the different people's programs out there, it doesn't matter whether it's Gartley, whether it's programs that Larry helped to bring forward to H.M. Gartley's work. It doesn't matter whether it's retracements pulling back into, or whether it's TAS market profiles or the Chapman wave. I don't care what it is out there, or Bollinger Bands, you name it. Whatever it is you trade, if you're trading and you are not familiar with the bullish and bearish reversal signals that you need to know, you're doing yourself the biggest disservice. That in technical trading. And so you really need to learn that. You got to be very careful, because I've taken a look at a lot of the tools and free tools and things of that sort that are available on the internet. And most of them are just simply dead wrong with regard to what it is that they teach out there. So be careful. But it is something you want to absolutely have inside your arsenal. And if you do that, you will find that your trading will improve substantially, because this is really all about, trying to gain some type of certainty, I suppose, in a market where there is no certainty. But that certainty is the odds become to your favor, because you can just study markets and you can say that, why do markets go higher on light volume? I can guarantee you one thing. If a bearish reversal signal has not shown up, those markets there's no reason for it to not go higher. Just as inside of natural gas, we said, okay, we're coming in to support, those levels ought to hold, and boom, those levels did not hold. We've gone right through that 0.618 retracement level. We've done it on a 10-minute chart, wide-ranging bar for sure, and a lot of volume behind that move. That says the next level out there may be the 0.786 area. But if we were to hit the 267 point today, then I'd say no, it makes 100% move and gets back to the $2.54 area. Like anything can change. The market can turn on a dime. This thing could turn into a bullish reversal signal today by the end of the day out here. I don't know. I just know that as we speak right now, that is not in the cards. Now, I mentioned, I think we were taking a look at the opening range out here, and we were taking a look at the opening range. So we've seen now that move below 21.12.25 out here. And the opening range is a very cool tool and program to use out here. But as I said, typically you'll get about 3 points out of it. But I mentioned in this case here with price, with the opening range bottom being 21.12.25, pretty good chance that all that you were really going to get was a move down to 21.10.75. Now, it actually spiked down just a tad below. It got down to 21.10.50. I hope that you will go ahead and accept my apology for being off by one tick out there. But that is the level of support. That's now if I go ahead and I make this, let me see if I can scrunch. Now, scrunch is a great technical term out there. I knew how to scrunch before I started taking technical classes out here. But you can see coming off of the low here from yesterday morning at 9:30 to the high out here yesterday afternoon, we've made a 0.618 retracement. Does not mean that this level will, in fact, hold. In fact, I would say more likely, you'll see I'll switch over to a 30-minute chart out here. So you've got that initial thrust down to the 21.10.75 level, and that should have held. If, in fact, price does not get back above 21.12.25, what we're likely to see here, let's go take a look at a 30-minute chart here for the ES Mini. You can see how price also moved down to, if you're looking at the ES Mini on my chart here, the 30-minute screen, you're seeing a horizontal gold line going across my screen. That happens to be a horizontal trading range boundary line out here. Now, this level hasn't been, and we're looking for opens and closes of candles at that level. And really, this is going to, we haven't seen one yet. We've just seen price get down there. But if that we see it close below that 21.10-ish area, what you're likely to see is a move down into the 2098. You'll see likely a run all the way down to the bottom here of yesterday. Well, was this yesterday? No, May 26th. Yesterday is actually right down here, and you're trading inside that candle right now. So yesterday's opening candle, May 27th, inside the ES Mini, the range looks like about 2102 to, well, let me move this here so I can actually read it for you. The range here, the top of the box, the top of the candle, not box, but the top of the candle was 2115.75. The bottom was at 2102. And 50 cents out there. So if it stays below 21.15 and you crack that 21.10 area, pretty good chance you go test that bottom. And I would say have to go ahead and ping or boing off that 2098.50 level. And that's what's going on inside the ES Mini as we speak right now. Now, what we haven't done is we haven't taken a look at any things here, any of the equities that are moving and grooving inside the marketplace out here. So let's go take a look at a couple of things. Let's go take a look at Chipotle. And folks, I cannot overstate enough the importance of going out and understanding your Japanese candlesticks. I think I've done an extraordinary job of taking all the years of information and packing into a 6-hour workshop, which is available at TFNN.com. You can send me an email. You can send Mike an email at TFNN. They'll be happy to get you set up for that, and it'll truly open up your eyes to, answering the question, hey, how come price didn't stop right here? How come this 0.618 Gartley failed? Well, it failed because you never got a bullish reversal signal or a bearish, depending on which pattern it was that was setting up. In any event, let's go take a look at Chipotle out here. In the case of Chipotle, a nice move today. This is a daily chart that we're looking at here. Actually gapped up, if you will. The reason why I say gap up is because, yesterday's close was at 612.50. It gapped up into the body of the candle, but a nice bull sash candle out there. It's a very strong candle inside of any chart that you're looking at. Now let's go see what Chipotle was doing here. Chipotle has this high volume low from the trading day of October 21st. There were 2.2 million shares. The top of that is 629.50. You were trading at 628.22 today. The volume there was, what was it? 2.2 million shares. And you came in there yesterday with light volume. You came in there yesterday with 744,000 shares out here. So closing above that level today, preferably you'd like to see it do it with less than 2.2 million shares out here. And that bullish reversal signal, it would at least suggest that Chipotle is going to go test at 640.62, about another $10 to the upside out there. And that is most likely what Chipotle will do. No idea what the news behind Chipotle was, but that's likely what the outcome is as we speak right now. A test of 640.62. If it fails to get above that level, then you probably come down and eventually test the bottom of that October 21st area at 607.55. CMG is the ticker symbol there. We've got Rally Software. Let me see if I can see what's going on here. Nah, you really can't. This has got to be probably some type of buyout. But let's go take a look at Palo Alto Networks out here. PANW is a ticker symbol. That's up with 1.8 million shares, about 3.5%. Let's go see what Palo Alto Networks is trading into. Looks like it's not trading anything. Made an all-time high a couple of trading sessions ago. Trading a bit higher here this morning. The high from 2 days ago was 165.09. You're trading at 166.31 as we speak right now. You've got a new market profile box that established itself today. You can see it establish itself, at a higher low out here. That's a bullish sign inside of Palo Alto Network. Western Digital Corp, WDC is a ticker symbol. Let's take a look at it. Up about 5%, $4.72 on 1.1 million shares today. Trading gapped up this morning, so no idea whether it was an earnings release or what was inside that news out here. Looks like this is going to make a run for the 100.71 to the 102.07-ish type area, and that is Western Digital. Any reason for it to not get above that? If it can clear, see the high. Well, high was 102.07, 102.07 both days out here. So 2.7 million. If it can clear 102.07, do it with more than 2.5 million shares. You got nice volume today. 1.2 million shares. You'd have an A to B equals CD to the upside inside of Western Digital Corp, WDC. To the downside, let's go take a look at Priceline. We know Priceline's been trading with inside a little consolidation area. That range has been between 1129.98. You're trading at 1190 right now, so no big deal. No big damage inside of Priceline. It needs to crack 1129 or 1264 and either to break out or do a breakdown dance. That's Priceline. Let's take a look at, what do we want to look at? United Rentals. Let's go take a look at it. Off $7 this morning. That's off 7%. Not showing any news behind it, but clearly there must be something. Or sellers just decided all at once, hey, let's go sell the heck out of United Rentals. Now, if we take a look at United Rentals, it's gapping down. It's got volume behind the move as we speak right now. We also know that United Rentals has had some significant resistance. There's a open window out here. There's a gap down at the 106.25 area. Small gap, but volume of about 3.3 million shares. We can see price came back up to that resistance line, that little supply line out there. Came back up here on the trading day of May 21st. Couldn't bust it up. Now what is it going to do? Well, it's going to go ahead and it's going to try to get into and at least test this day of April 22nd is what it looks like. There were 6.8 million shares. That was to the downside. The top of that area is 97.52. The low is 93.72. It may find support at 93.72. If it doesn't do that, then it heads all the way back down to these lows back here in January of 2015. That's into the 81.20-ish type area. That is on ticker symbol URI, and that is United Rentals out here. Let's go take a look at Let's go take a look at the ETF structures out here. We haven't done that this morning. Let's go do that. Let's take a look at the QQQ ETF series down 39 cents, 6.6 million shares behind the move to the downside. What have the Qs done here? Now, what's interesting is the Qs today, a little inside day. Yesterday, nice volume behind the move. 30 million shares behind the move, moving into a swing point that only has 31 million shares. So lighter volume, but not that light. I mean, about similar volume, right? Let's cut it some slack, a million shares. You're still trading inside that April 27 swing point, and that is the 110.02 to 111.16 area. And that says that at this stage here, as long as price trades inside the Qs will go test that 111.16 area. That's its message to you and I as we speak right now. Inside of the IWM, the Russell 2000, 56 cents with 7.0 million shares so far traded. What is it doing? It's just trading with inside its TAS market profile box. That's the best thing that we can say here. Yesterday, the move was with light volume to the upside, closed inside its most recent swing point, which was from May 20th. You are trading just below that 123.34. No, you're trading just above that. You're trading below that. You are trading below that. 124.34 was that number. What's the IWM trying to do here? It's trying to figure out what the rest of the market wants to do. That's really what, it's just trading with inside. It's with trading with inside the box. Your best setup on this is to sell it at about 125.66. If you were to buy it, expect that to be your resistance area inside the IWM. If we take a look at the SPYs down with 80 cents, 23 million shares behind the move. Pretty decent volume so far during the open. An inside day here. In the case of the SPYs, it too got into the May 20th swing point. That had 76 million shares, and you got into it yesterday with volume, 93 million shares out there. You closed inside it. So it is unusual to see it just go ahead and reject it without actually testing that high. But maybe that's we're early into the day out here. In fact, the SPYs, as long as we set the SPYs, as long as they stay above 211.11, they've not given you any kind of short signal at this stage of the game. Let's finish this out by taking a look at the Dow Diamonds. Now, the Dow Diamonds of interest yesterday really up on light volume, unless my system was wrong, and that's always a possibility. But I show volume yesterday inside the Diamonds of 3.5 million shares out there. That's pretty amazing. Today, you've already done 1.5 million shares, but you've got an inside day. There's, yes, it's a gap down, so to speak, but it's really an inside day. You've got two inside bars, two inside days. Yesterday was inside day. Today, so far, an inside day out here. This market, the Dow Diamond's a little bit ambivalent. That's why you just simply pay attention to the summation index, the price oscillator. Where are things? And at this stage of the game, you've got things below the zero line. Sellers are really the ones that are in control of the Dow Diamonds. This is Steve Rhodes with TFNN. Right now, we've got the Dow. She's off about 75 points. S&P down 8. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 80 now. S&P is down 8. Composites off 17 points out here. Let's take a look at, let's kind of get 4 minutes here. We'll recap the day for you. Let's go take a look at the intraday time period chart. Let's look at the ES mini. Let's look at the 30-minute chart out here. Now, this 30 minutes doesn't close, obviously, for about another 5-6 minutes out here. We can see that, and this was really a nice move. You know, I often talk about the seventh inning stretch candle. That's that G count using the Chapman Wave, which is just a terrific tool out here. Another one to add to your arsenal. You know, we take a look at a number of different tools on my screen right now if you're watching this on Tiger TV. Take a look at that price relative strength divergence move down here to the which formed the low a couple of days ago, right? Came down there. That's an area, that's a reversal pattern that is out here, and it's such a good reversal pattern that it's a must. Would that teach you how to trade that inside the Master Trader course that I offer to you. Coming off of the bottom, coming off that pattern yesterday, price gets all the way up and forms that. This is coming into the 4 o'clock cash close out here, gets all the way up into that 7th inning stretch, forms a little shooting star candle out there, the opposite of the hammer, oftentimes a reversal area. Get a little bit of follow through that very next trading session. Now what we're seeing take place is we're seeing a fourth move down, right? There you get reversals, and I know Basil will talk about this during his show. But you get reversals anywhere between, you can get them anywhere, obviously. But typically you start looking for them between waves 4 and 7 out here. And 7 is the ultimate because it becomes the easiest way to make a trade inside the NQ, inside the ES, whatever it is you're looking at. So at this stage of the game, don't know how the candle's going to end exactly at 11 a.m., but it looks like right now you've got a hammer candle that is forming out here. And should that be it, then expect the market to move with inside that trading range, the day's opening range out there. And again, if we go back to that momentarily, let's do this just so we can set this up. There we go. And if we go take a look at that opening range, we saw piercing of that low as we talked about, and we saw price run right down into support, which was that 0.618 level, and then price never really closed down below that 2112 area. So what does that mean? That means right now we can see a new box. This is a 5-minute chart that we're looking at, by the way. I can switch over. But right now, the 5-minute chart, just simply so you can more easily see the opening range out there. You get a hammer candle on that 30-minute chart out here that forms. Would suggest to me that you could easily run all the way back up to the top of the opening range, 2120 out there. Inside the ES mini on a 5-minute basis just needs to clear 2116. So that's what's going on intraday. You know what to look for on the daily charts out there, and that's going to be the VIX index currently trading at 1370. 1376, 1377 is the 50-day number to be paying attention to. Any close above that, you can expect, some price erosion inside of the marketplace. Summation index, clearly as we speak right now, sellers in complete control of the NASDAQ composite, of the New York Stock Exchange, and inside of the Dow. If it remains that way, you can expect the markets maybe not to really start any tremendous pullback. Maybe it's not until the early mid part of next week. Maybe things just kind of hold off inside these ranges as we speak right now. It wouldn't be unusual for that to occur as we begin moving truly into summertime trading out there. So that's what I would be watching throughout the day. Of course, the other thing you want to watch, because it is Terrific Thursday, you want to continue to watch TFNN. You got Basil Chapman. He's coming up next. It is Thursday. I don't know if Larry's doing another hour, and thanks to Larry for filling in for me this week during hour 1. I won't be with you tomorrow nor next week, taking a little time off, but I will be back the following week out there. So have a great day, great afternoon. I look forward to seeing you when I get back. Stay tuned. Our man Basil Chapman will be up next. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.